Hello guys, if you want to be trading cryptocurrency or forex market for profit, you have to choose a particular strategy that best suit your kind of personality. Could be either support and resistance, price action, ICT, smart money concept. But for me, I prefer to be using smart money concept because it always fits my likeness because of its simplicity. So if simplicity is all what you want as well, then smart money concept is a very good to go strategy for you. And smart money concept, as the name implied, it simply means a way or an approach of trading with the big mover, big trader, such as bank and financial institution in the crypto or forex market. So these are the people that actually control the movement of the price. So if you are smart enough to see their footprint, because every chart shows the footprint of all this smart money in the financial market. So if you can spot their footprint and you can follow them to buy when they are buy and to sell when they are sell, you are going to be more profitable. So SMC simply means smart money concept. So when you talk of this smart money concept, there are different terms and slogans and terminology you need to understand about this smart concept. So, and there are a lot of them. We call them institutional reference point. For the purpose of this video, I'm going to be talking about 5 smart money concepts you must know. These are the very most important for you to know if you want to become profitable in the crypto or forex market. So having said that, so let's quickly take a look at some of these 5 smart money concepts I'm talking about. But if you are still thinking or you are looking for the real meaning of smart money concept, let's head over to the Google and search for the name of smart money concept, and let me see, maybe hopefully we can find a defined definition for this smart money concept. Although this video is not about theory, it's not more about this or that, is purely about what you need to know about this smart money concept. But for the full meaning, if you come to Google and you type smart money concept, for you to get the full meaning of this particular terminology and trading strategies. Can you see smart money concept? So there are different kind of courses out there, but that's not what I'm after. So smart money concept is a capital placed in the market by institutional investor, market mover, central bank, funds, and other financial institutions, as you can see right here. So you go to Google, you search what is smart money concept. Institutional investor, central bank, hedge fund, and market maker manipulate financial market to their detriment or in their own favor. So smart money concept, see another one here. Smart money is not just a forex trading strategy, but an online philosophy about how the market works. So basically, you can see that this smart money concept is a very good concept for you. So the simplest way to describe smart money concept trading is to say that it is a price action by different names. So having said all these things, you can see there are different kind of definition for that, but that's not where you are actually here to talk about 5 important concepts you need to know about this smart money concept. So let's head over and talk about these 5 things you need to know, and I'm going to be showing you them live in the chat for you to understand. So allow my trading view account to load again, and we are going to be talking about them. I'm going to be showing you one after the other on a live chat. So let's wait for this thing to load. So here we are. So here we are. Let me load for my So now 5 concepts you must know about smart money concept. So the common terms used in smart money concept are this one. There are more than this, but this one are the 5 that are going to form a basis for you to become a profitable crypto or forex trader in a financial market. So number 1 of them is what we call a break of structure. So break of structure simply means if you after you have must have defined a kind of trend. There are different kind of 3 markets. We have 3 kind of market in the financial market. It's either uptrend, that trend, on a what? On a ranging market. It all depends on the type of market you are. So whichever one you are having, let me pick out my, is it pencil or brush, whatever thing you call it. So let's say we have something like this that is going up, down, up, come down, up, like that. So this is what we can call this one an uptrend. Sorry about that. We can call this one an uptrend market. Delete. Let's leave that. Kai. Sorry about this thing. Okay. So we can call this an uptrend market because you can see this there. There's one particular high here, and this one break the high. So once you see a valid break of structure either to the upside or to the downside, you mark it as a what? As an area where I need to pay attention to, that this particular market is going up. As you can see here, this is a valid break of structure right around here. Let me look for trend line. So as you can see, okay, as you can see, the valid break of structure here, this is the high, this is the high, and this high was breaking. So when you see this one, we call it a BUS. And otherwise, if it is a downtrend, you are going to see something like this. Let me take the brush out again. So you are going to see something like this. Can you see this one? It go up, it's going to break this low, it will go up a bit, it's going to break this low, it will go up a bit, it's going to break this low again. So something like that is what we call what we call a downtrend breaking of structure. Let me scroll. I'm not familiar with using of this pencil, so sorry guy. So as you can see, this one right here, this is a low, this is a high, this is a low. It come up, it break. Once it break this low, start going down like that, we call this a break of structure. When you see that a particular low, the market continue breaking the low, that's when we have a what? A downtrend. When the market continue breaking the high, that's why we have what? An uptrend, and we call it a break of structure. You need to know that. I'm going to show you that one when we get into the chart. Another one is what we call change in character, or which otherwise we call a chalk. A chalk is a spot at which whereby a particular market change direction. So when you are having an uptrend, the market is going up, is going up, is going up, and the market eventually decide to change direction. So that's why we are going to have a what we call a change in character. On some other, as like ICT, they call it market structure shift, which is MMSS. It depends on what you are going to call it. So it's also, okay, as you can see, I don't even know it's in the number 3 we're having here. So we call it a shift of market structure, SMSC. That is, the market that is going up eventually change direction. So change in character and structure of market, shift of market structure are the same thing. So another one is order block. These order block, these are the area where there is a massive pump in the price of a particular currency, where the market just come and form a very huge movement to the up or a huge movement to the down. So we mark that level and we call it an order block, where a large orders of a particular buying or selling position are being taken. Is what we call an order block. And when this order block happen, there's something we call a fair value gap. This fair value gap is going to be an imbalances in the movement. When you see a very huge long one candle that go up, one candle that swallow like 10 or 5 candles, so we have what we call a fair value gap. That is, the market leave a space, and this space, it is important that the market come back to that area to fill the place before the market continue moving up. So without wasting more time, let me just go into the chart and I will be talking about all these things one after the other. So here is the chart. So when you look at this thing now, so within few minutes, answer the question. You can go into the comment section and type the question: are we in an uptrend or in a downtrend? So look at this. So is this chart a downtrend or an uptrend? This is a 1 hour BTC USDT. Are we in an uptrend or in a downtrend? So if you say we are in an uptrend, you are quite right. But if you look at the recent price action, so I'm going to say we are in a what? We are in a consolidation, because if you look around here, you are going to see there is no valid break of structure either to the up or to the downside. So if you know how to read the market movement, you are going to agree with me that BTC has been what? Has been ranging. It has been consolidating around this up here, which is around 35,432, and here, which is around 34,122. So BTC has been ranged, has been going up, come down, going up, come down. So you can say we are in a range, but previous to that one, we are in an uptrend. So that is not where we are. Let me look for an area where we can see a valid break of structure, which is one of the terms you need to understand as a smart money concept trader. So now let's look back here. So far we say we are in an uptrend. We need to look for the area where there is a break of high, where the break of a particular high. So let's look at this particular area here. Let me take my trend line. So let's look at this particular area. So you can see this is a very huge is a very huge high here. So you can stretch it to the other side to see how important that high is. So then what do you see here? So what do you see with this huge candle? What do you see with this huge candle? You can see that this huge candle break this particular high because before you can say something is a valid break of structure, the candle must close above that particular high. So this one this is a typical example of what we call a liquidity sweep. It's also another aspect of smart money concept you need to understand: liquidity sweep, liquidity grab, and all of it. But let me just talk about this 5-1 as we are continuing. Because of this tutorial, you are going to be learning more about that. So this one come up here to swap liquidity, but this candle is a very huge candle. Come here and close above it to break this structure to the upside. So we mark this area and call it what we call a break of structure. And when you have that break of structure, what you need to do is to mark the area that bring about that break of structure, and that area is what we call an order block. So the area that bring about a huge move that break the structure either to the above or to the downside, we come and mark that particular candle. If it's in an uptrend, we mark a red candle if you are using red, but my own is black. So we mark a black candle that bring about that chain tractor, because the price is going to come back to that area. As you can see, the price is going to come to that area, which you can also look for your possible trade entry. As you can see right here, this is the black candle. This is the black candle. This is the black candle that form before a huge move that break this structure. Mark that candle and come and wait for your entry position here, and place your stop loss below this candle, and you shoot the market to the top side and target this current high as your what? As your take profit, and boom, and you are good to go. You make your money. So that is order block. So I was trying to explain your break of structure for you, but I was able to spot what we call an order block. Now, after that one, what we call a market structure shift. So if you look at this market now, you can see this one from here, the market has refused to break this high, which is the latest high. So, but where is the low that formed this high? This is the low that formed this high. This is the low. This is the low that formed this high. So immediately you see a break. This is the low here. The low that formed this line is the latest. Oh, there's no any other high except this high. All this one you are seeing, they are just internal range. We have external here and we have internal range in any particular chart. So all this one that happen between is what we could just call an internal range. So don't care about them. So what you care about is a major external range at this one. Which is what? This is the range we are training for now. This is the latest low, and this is the latest high. So until this low is breaking, once you see this breaking of this low, you are going to have what we call a market structure shift. So as you can see, we are seeing an uptrend on the top, but that particular low is breaking. So let me swipe back and see, maybe I can see a spot where there is a market structure shift. Let me see. We are in an uptrend. Let me look for this. One of my charts in the past. As you can see, the chart play out as I mark it. So the chart play out. I expect market to come down here and the thing to shoot up. I eventually shoot up as I predicted, and it is a setup that make a good money for me. So let me look back and see. Hopefully, maybe I can see where there is a what? Where there is a shift in market structure. The BTC has been on a high, so it's very long. So let me change to 4 hour. Hopefully I can see. Okay, let's change to 4 hour. Maybe I can see where there is a shift in market structure for this particular pair. Wow, very interesting. So let's look at this area. So let's look at this area. As you can see, there is a huge pump here. The market is pumping up. All this area, the market is ranging. But let's look here. What eventually happened here? So if you look here, you are going to see the latest high. The market has not really break any high again. So because all this one are long wick, the market does not close above. Until the market close above all this long wick, before you can see we have a valid break of structure. But what do you have? This is a low. All these one are the current low, and we also call this market a range. But our target is what is the current lower high that the market need to break if the market eventually need to change a character. So let me look for this. So look at this area. look at all this low. These are the low the market need to break before you can say the market has eventually changed the character. So now look at it. What market did? Market break this low here with this huge momentum candle. And we have what we call a shift in market structure here. The market had been going down since that time, and the market is going to eventually come back to area again to retest it, and you need to look for your entry there and you short the market down. Now, about the fair value gap, this is what we call a fair value gap. Look at this candle, huge candle to the downside to leave a gap between this candle here, this blue candle here, and this candle here. There's a huge gap, so the market will eventually come here to fill this particular area, and that area is what we call a fair value gap. So you can look for entry here again, because market is going to systematically come down here to come and fill all those foil that is left behind. There's also another invalid fair value gap here, which is where you see this long wick candle that go there to come, and when you see a very huge candle move to the up or downside, there's going to be a fair value gap, and the market will eventually come down back here to come and feed that particular spot. That's what we call a fair value gap. It's a very good area for you to look for if you are trading, for you to know if you see a fair value gap in a higher time frame and you are trading on the lower time frame. You must be very conscious, because market is going to eventually go there, because liquidity is the bloodline of the market, and it's where the market always move back into. When you see a huge move, look at this one, a huge move up. What market did, it come down to fill all this gap that has been left in between this movement. So all this one, can you see this green candle here? It go up, leave a huge space. What market does, it's come down to come and balance this. Anytime you see a huge move, market usually come down to come and balance it. It's another strategy that you can be using. So these are just one example of the smart money concept. You can help yourself to learn more about smart money concept. It's not a reference point for you to be profitable trader if you want to be a smart money trader. As you can see, all this one you are seeing, this one is a fair value gap. This space that you see here, market will systematically come down in this area to come and fill it up. We call them a fair value gap, and imbalance them in the market. Look at this huge one now. This huge move, what does market do? It come back to fill it. So definitely market will come back and fill all these imbalances you are seeing above this particular price. So if you move the price forward, you are going to see that the market has eventually come to fill those areas. Let's see, can you see all this one you are seeing here has filled all those areas that we left in the past? That's how the market move. How you have learned one thing or the other. So if you have any question, go into the comment section and ask me the question, and I hope I'm going to answer you as soon as possible. So till I see you in another video series, Dola Bolaji, please do well to like this video, subscribe to this channel if I get to do so, and drop me a very comment for this video to reach as many people as possible. Thank you for watching. See you in the other video.